Hey, good morning, everybody. Good morning, good morning. How's it going? Infinity, Don, Valerie, Wade, Mark, Don, Ed, Sergio, Al, Michael, Francois, Aaron, Eric, Robert, Craig, Rob, Nikki. Good to see everybody. JB, Rick, Sledge is here from New Orleans. New Orleans. No, LA. That's funny. Could just say you're in LA. It's like Louisiana. Lower Alabama, Los Angeles. Yeah, around here. It's kind of funny. Anyway, my my grandparents had a pig farm in L.A., Lower Alabama. Logan, Cliff, Alan, Anthony, Bill, Dave, Andreas, Rongamer. Glad to see everybody. Rongamer, how'd that delivery on those Cybertrucks go? Didn't even tell me. And Karen's here. Holy moly, my oldest child made it to the live stream. Indy, Jan, Roland, Merle, glad to see everybody. If you want to chat with me like all these fine folks saying good morning, click the button over here. Be a subscriber on the channel. A few seconds later, you can chat while I'm live. Now, if you're tuning in and I'm going live here at 9:16, 17 Eastern time. If after about 10 o'clock Eastern time, I'm probably not live anymore. So you're gonna have to leave a comment down below if you want me to respond to you. And I really try to respond to every comment that gets left. And so, but the other option is to click the more button down below the video, expand it out, pay $5, and you can come get in Discord and chat with me there too. So that's another way we can go about this thing. And remember, if I say anything today that you like, that was helpful, beneficial, knowledgeable, whatever, give me a like right down there underneath the video. Thumbs up. Super helpful. Tell YouTube that people kind of liked the content, that it was beneficial, you interacted with it. And it's not necessarily, even if I say something you don't like, you can thumbs down it. It's just the interaction that YouTube likes. It doesn't actually matter for your recommendations or anything like that. So it's actually more about the video and getting promoted out to other people. Funny enough. So anyway, moving on. Debt is a little bit nutty. Maybe a lot of bit nutty, depending on how you look at it. And I got of course, I've got a chart that's kind of wild we can look at. And right here, check this out right here. Make sure there we go. Yeah, make sure I get the chat back up. There's the receipts. $271 billion. This is by good old Uncle Sam right there. Total receipts. And there are the outlays. There's the money we're spending to make that GDP keep climbing. $576 billion. Maybe I'm not the most swooped at accounting, but do know a little bit about math. And 271 is much smaller than 567. I don't know about you. If you spend twice as much as you make, eventually there's a problem. And you become insolvent. You have to file bankruptcy. If it keeps up, you get yourself in financial jam. All right? We are into the realm of a potential debt spiral. This is a problem. This is a big problem. We have a spending problem in this country. It's not about anything else. It's a spending problem. We need to get rid of a lot of this. All right? Unfortunately, for people that haven't planned, the grasshoppers, think about the grasshopper and the ant, If you haven't taken care of you, nobody's taking care of you better than you. If you haven't taken care of you, if you're counting on Social Security, Medicare, healthcare, if you're counting on these things, you need to be very, very careful. A lot of these, if the government becomes insolvent, we're in trouble. Well, they can just print more money up to a point. And then we get hyperinflation. And then there's a lot of problems. There's a lot of problems that stem from this. And this is a problem. This is a big problem. Look, Social Security, we're bringing in more, but it's projected to become completely insolvent. They didn't save this money, they spent it. And they, all along the way, all the money people put in, they didn't save it, and they didn't, Social Security fund is basically zero balance. It's just a number. And it's Venezuela vibes. And this is a problem. Income security? Yeah, go look that up. Yeah, what's income security? I'm not getting into all the ridiculous crap that goes into this budget right here. But that is the total outlays. This is just February's numbers. Just February's numbers right here. We're on track to rack up $1 trillion in extra federal debt every 100 days, every 3 months. Look at that. This is ridiculous. Absolutely ridiculous. $296 billion budget deficit that went right into debt. And then all the interest on that debt. This is a serious problem coming down the pipe. And I'm not here to tell you about fixes or anything with that. Is it a problem today? Probably not. Is it a problem tomorrow? Probably not. Next week? Probably not. Is it going to burn down our stock market and everything eventually when this thing comes to head? Absolutely. This is a big old problem. Then when it comes to head, it's going to hurt. It's going to hurt a lot. Especially anybody that's dependent on this, or 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 you get the point. Yeah, I mean, it's a simple financial budget constraint, right? Don't spend more than you make, unless it's on a extremely temporary basis. I mean, it's gonna devalue the dollar even more. It's gonna cause extreme problems. This is why, if you've heard me talk about Bitcoin being a credit default swap against fiat blowing out, that's right there. That's kind of how it's all happening. And I pulled this up last week. U.S. national debt clock right here. And I'm going to zoom it out so we can see it all. So right there, 34 trillion, 34.5 trillion. And you see how fast it's all ramping up. And unfunded liabilities. Zoom this up and actually look right there. With unfunded liabilities, $213 trillion. That's $635,000 per citizen of debt that we've racked up. $635,000. Who makes $600,000 a year? Raise your hand. Not very many hands raised, I don't believe. Look, in our asset, look, we're basically insolvent at this point. Look, our assets, U.S. national assets, if you divide that out per citizen, $560,000 per citizen. Liabilities, $635,000 per citizen. I don't know why those aren't the top. I mean, that's a big problem. Huge problem right there. Huge problem. And look, our assets are actually dropping right now. We're going the wrong way. We're not growing our assets. We're declining. Corporate assets are declining. Household assets are declining. This is a problem. This debt problem. Small business assets are actually climbing. But this is a problem. I don't have a fix. All I can say is be prepared for the problem when it actually comes. I mean, right there, interest on debt. There's our Medicaid, Social Security, National Defense, and there's the interest. That's the ticking time bomb right there. Growing crazily fast. There you go. The unfunded debt just getting crazy. There's our credit card debt too. $8,000 per household. Student loan debt, $38,000 per student. Just wild. Just wild. If you haven't thought about the debt, so this is just usdebtclock.org. Right there, usdebtclock.org. You can just type in debt clock, debt, DEBT clock into Google and pull this right up. If you're fascinated, I mean, you can sit here and watch this, dig into all these numbers, and when you mouse over, it actually tells you something about each one. It's just craziness right there, right now. I feel like this is just out of control, and nobody seems to actually care about fixing the problem. Just, I mean, that was brand new numbers yesterday for February, and it's just, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining. It is not a recommendation to buy or sell any financial instrument or anything else. All right, don't buy stuff from gurus. Don't buy stuff from people like me, unless you trust them. And build that trust. Watch my videos. Keep coming back. Make sure you're subscribed. Make sure you hit the bell with the notifications so you know when I go live every single morning at 9:15, and then Tuesdays at 5 p.m. Which we had a pretty good 30 minutes of awesome yesterday. I feel like it went a little long, well, a little longer than normal, but it's pretty good. And don't buy stocks, don't buy options, don't buy forex, don't buy futures, don't buy cryptos, don't buy bonds, don't buy treasuries, don't belong them, don't short them, don't trade them. It all involves a substantial risk of loss. And if you're just like, hey, I need some help, like I need to know what to do, that's called personal advice. All right, personal financial advice. I cannot do that. That's not what I do. You need to hire and consult somebody, but you got to make sure you trust them too. So, I mean, most people out there are just trying to make some of your money into some of their money. Now, coming up on the calendar, we have PPI tomorrow morning. And we do have a 30-year bond auction coming up this afternoon, which if all of a sudden there's some volatility in the market at 1 p.m., and you're like, what the heck happened? It's that 30-year, but I don't expect much out of that. Core PPI. More importantly, maybe retail sales here tomorrow. I don't know. Are retail sales coming in stronger or are they coming in weaker? And we've been on a trend here. Last month we got negative 0.6. Kind of been weakening. It's hard to see with the that big spike we had during COVID and stuff. But look, we've kind of been declining on the retail sales. It's been a downtrend. It's not a huge downtrend compared to the chaos that we saw before, but retail sales kind of on a downtrend here. That doesn't bode well. And I don't know if you just saw the Dollar Tree numbers coming out and their report, how many stores they're closing. Don't look too good. Anyway, and then on Friday, we have Empire State Manufacturing along with consumer sentiment coming out later in the week. So there's what we got today. Not a whole lot economic news wise, but next week's the big show, the FOMC meeting. And right now it's looking like they're probably going to hold the rates. That thing keeps disconnecting for some reason. Right now looks like we're going to hold the rates steady. FCG, and there's the market open, I guess. That's looking like sideways. And there's more alerts. All right. So if you don't know what this is, DGS2, 2-year constant maturity rate. The orange line is the Fed funds rate. If you have TradingView, that's what this is, TradingView. If you have this, you just type DGS2 up here in the top and you click compare. You type FED, FUNDS, add it to the chart, and you can make this cool little chart right here. Now, why am I focused on this? For those of you that have been here, every time these two lines do this inverted thing where the orange is above the blue, right here, we had a big downturn in the market. Right here, you remember 06, 07, 08? Housing crisis. Right here, 09, 2000. .com bust. You remember that one? So for my entire trading career, every time these numbers invert, like just like we have right now, has led to a financial crisis. Now, last year, when they actually crossed, I speculated that maybe we would come out here for a little way, a few, maybe a year, and then the GGS2 would pick back up. And the actual financial problem would occur up here somewhere at a higher place. So far, we're just kind of bumbling along. They're going to hold rates steady. No reason to change anything. If DGS2 breaks down below here, if it breaks down, they're going to cut rates. All right. If it breaks higher, they're going to raise rates. Probably if it gets above where we were right back there in September. And if you're like, well, mortgage rates eased up. Yeah. Mortgage rates followed this blue right here. It has nothing to do with the Fed rate. The Fed rate, they just chase the market. If you thought the Fed sets the rate, welcome to the actual reality. The blue rate is the market rate. The Fed chases the market rate. Right now, they're sitting a little above. I guess it's kind of a safety hedge. Like they kind of, the smart people could realize that that's the condition where we might go again. Typically, we see inflation do a double spike, right? We had the first wave, and we've kind of chilled out. I think they're waiting for the second wave to drop, and that's partially on the way contracts are written. Corporate contracts are written by the year. You take in your costs, and you write your contract, and like a lot of people got their rear handed to them during COVID. Costs skyrocketed for logistics and all sorts of things. And then we had this mega inflation that picked up, and it partially was on the back of printed dollars, but partially it was on the back of the costs incurred during COVID got rolled into those new contracts. And then we went through this period where it kind of eased up again. But typically, because of that cycle, those costs that get incurred the second year get rolled into the next year, and then we have this huge inflation pick up again. And it usually happens in 2 to 3 waves until it settles back out. That's just the way contracts are written annually for business, supply contracts. So I would expect to see this climb again on another inflation spike. I don't think we're done with the inflation yet. And as I've talked about in the past, inflation tends to be on like a 72-month cycle, and the economy tends to not have these rate changes fully baked in for 24 months. So the first rate raise back here, and 24 months later is out here. First rate raise was right there. 24 months later, right in here. We're just now getting to 24 months. Just now. From the first one. So we'll see what happens. All these are going to start really being fully baked in the economy. And I mean, it's an unknown. It really is. Like how this all comes apart. Now, some things we can look at. ES here. It's S&P 500 futures holding up pretty well this morning. Looks like, based on the fact we broke above the resistance from that last pullback last week into Monday, that we're probably heading on up here, 52.80. That's probably the target. Probably the target at this point. Now, you may be like, what the heck, ES? That's just S&P 500. I use that because S&P creates these gaps overnight. They don't keep track of the index overnight. It stops at 4 o'clock when the market closes. It reopens at 9:30 the next day. There's no data in between. It stops right there at 4 and reopens at 9:30. No data in between. Now, ES though, we get all this overnight action. And you can actually see what the market was doing overnight in the wee hours in the morning. Just kind of chopping sideways. We just kind of held this range. But surprisingly, I created a tool that actually, you've heard me parrot this 70% likely thing when we do this market roadmap retrace and we break above the 618, or 70% likely to hit the 1272. I actually coded that into an automated strategy that can go test this in the market for me. It actually comes out higher than 70 so far in my limited initial testing. And it looks like it might be something like 80 to 85% likely that we do that move. That's kind of crazy. So I'm going to stick with 70% likely right now, that we're going to pop right up in this zone right there. It does have a little variance by ticker. And it seemed to work on all time frames, all the way down to 1 minute, all the way up to the weekly. It's just the craziest thing. This pattern works on all time frames, and it's the same probability basically. So be careful out there, right? Don't short yet. I mean, we could break down here. It could be could be the 30% that fails, or the 15%, or whatever it is. But it also has a high probability to ramp right up there again. Another ramp. We've set up the pattern. Now, interesting though, right here, NASDAQ not playing the game so far. Finding resistance right at that 618 level, not breaking above. And if we break back below here, we're probably going lower. Run the high. 1, 2, 3 clicks. That would put the target right down here at the bottom of the bottom trend channel. Right down in here. Uptrend to the lows. That may be a break. Be careful. Things are starting, the cracks are starting to show in this rally. That would be a crack when ES and NQ start diverging, especially since NQ, that's the NASDAQ 100, QQQ, that's your 100 biggest, strongest companies. 14 out of the last 15 years have been up years in NASDAQ, where ES is more like a 50-50. Be careful. Or maybe ES is more like 80-20, and then Russell is more like 50-50. Russell, though, did the same move yesterday. So your small caps and your big dogs are in alignment. That something may be going south here. Very cautious right now. Remaining cautious. And if we go look at this really quickly, pop this chart up. As I was saying, the last couple of days, this rally from March 2023, last year, March 2023, up through July 2023, that rally took, that long. We spent that long right there. It took 137 actual calendar days, 95 bars. Right here, if we move this over, right to the low, pull this up. Looky where we are. Coming right to the end of this baby. Time-wise, we're at the same exact extended market period of time we did last year, March to July. What happened after July? 3 months of extreme pain. Now we went up higher this time. That means the correction could be more severe. Please be careful. All right, we're right at it. Right at it. Right at it. Is it today? Is it tomorrow? Is it Friday? Is it Monday? I don't know. One of these days is going to be the high tick, and we're going to be down for a while. I mean, right here, when we were doing this, everybody's calling for like a new Black Monday, a new mega crash. Anybody remember that? Anybody remember that? Wasn't that long ago. Now here we are. Everybody's talking about we're not pulling back. We're never going to go down again. I see it in the headlines. Be careful. Being complacent. We have the market psychology right here. Euphoria. Everybody's getting rich. And then we get some complacency. And then we get the big drop. Be careful. Be careful, be careful. Know when you're wrong, all right? It's not about being wrong that costs you money. Everybody's wrong from time to time. It's making quick actions and decisions when you're proven wrong and not staying wrong. Staying wrong is what gets you down here in the depression. You rode it all the way down. Ugh. My retirement money's gone. How can we afford to pay for all this, for anything? Be careful, all right? Be careful. Oil, popping, baby. Look at that. Look at that. It's a beautiful start. Still got to break higher than what we had right here on March 1st. If and when we do, it's game on. Those higher targets. Right up here, 83, 86. You may be like, how do I trade oil? USO, UCO, USO, United States Oil Fund. Easy, liquid. UCO, if you want to add a little leverage to it, if you want to play the options, I highly advise you to be careful. Leverage cuts both ways. This is an ultra. That means it's leveraged. And there's my targets that I've had for, 3 months now. This thing can pop and go. Could be pretty big. Could be pretty big. All right. There was my initial position. I've actually bumped that out to well into later in the year now. Closed it on a drop and took a little loss and then re-entered. And now I'm sitting here waiting. Now, UCO looks like it's about to break out compared to, but you always got to go to the underlying, go to the oil chart and look here. Don't just trust the leveraged derivative. GC right here, consolidating. I thought we might see yesterday I thought we might retest. Basically, that's what we did. We retested the breakout. Time to go. Next upside, 2214. Once we get above that 2180 area, 2187, that's like 70 to 85% likely. Same pattern all the time. Right there it is. Bitcoin pushing to new highs this morning, retracing just a little bit as we came into the open. Next target up, 76. And then that other higher target up there around 80, 76 to 82, I think is the next one up there. Yeah, 82, where the confluence is, the darker lines. Yeah, that one's probably going higher. Ethereum had a upgrade today and seems to be pulling back a little bit. Watch out for retrace on Ethereum. Ethereum is not Bitcoin. They're not even they're just loosely related in the crypto space. And be careful on that one too. Dollar, this one came back up to retest. And that was support. We broke down firmly, coming back up to retest it. As long as we stay below it, the target is down here, like 99, possibly even lower, mid-90s, where I was looking last year. We just never got down that far. It's going to take more time to get there. Eventually, we're probably coming down here to the mid-90s. One way or another, this thing needs to correct back down. MSTR, making the list. What's popping? What's dropping today? MSTR, next target up, all the way up here, around 2,000. It can do it. It can do it pretty fast, too. That's starting to be one of these ridiculous ones, just like SMCI, just like NVIDIA. Remember, that graph right there, when I cover up this part of the graph, look what we're left with. You see that, right? You see that wicked climb? You see that wicked climb? Where's the top? I certainly don't know. You certainly don't know. This is starting to be dangerous, though. I took my piece out of there. Sitting and waiting. Waiting for another opportunity. BGNE, Pharmaceutical, biotech, pharma, just not my favorite sector at all. These things get FDA approvals and denials and whatevers, and you can't predict it, and it wrecks the chart pattern. So I typically stay away from that sector. FLUT coming on up. Oh, just cracking into the target zone. Just getting there. A little bit higher. 240 maybe. GXAI. Oh gosh, that's a dumpster fire of a EKG chart. Probably gonna go back to down there. It's even got the reverse split in there. Whew. Don't touch that. And I mean, you can trade it if you want to. If that's your kind of bag, your game. But that's not my game. I'll stay away from the dangerous stuff like that. It's just, ridiculous. Reverse splits are not bullish, and eventually that money's gonna come back out of there quickly. Don't get caught holding the bag. KB Financial, rocking on up, breaking out potentially. Breaking out. I've got it adjusted. Got to flip that back. There we go. Breaking out above those highs. Got the next high resistance up here. Right up in that zone. Watch for this thing tends to spike up and then reverse hard. Tends to go on these runs and then reverse really hard. Remember that chart? Party complacency. I mean, here we are again. It's not like those are green candles either. That's a lot of red candles on the way up. Watch out for the rip. Celsius Holdings. I mean, that went on another rip. How high can we go? We can keep climbing. I mean, the fib ladder keeps going on up. But you got to be careful. We're up past the likely place to turn down again. But it can keep climbing. Certainly keep climbing. PDD. Looks like we might be in the bounce zone here. We get back above this zone, up around 142. That's 70 to 85% likely. 161, 172. Above that. Baidu. Nice. Still along this one. Resistance still right up here at the roadmap line. Get above that. We've got targets. We need to break higher than this high back here. And then we need to get to this target and this target. And then we've got this resistance up here that we need to clear. And then potentially, we go on the mega play, the mega run. Could be all the way up here. If it can actually get going. It's a big measured bounce. That target will put us right up in this zone. Not sold on it yet. I've been in the position since back here in like October. Just sitting and waiting. Has not been able to break above the roadmap line. My eject button on a breakdown below 92. And there may not be nothing left on my options at that point, but we'll see. BitX, for anybody that took what I said to heart and bought some of this, you're probably pretty happy with yourself. I talked about it all the way back down here, that if you wanted to leverage Bitcoin, but not go buy Bitcoin, and you're in the US, I think this was the way to do it. I cautioned against options because, I mean, that's like 10x leverage on 2x leverage and 20x leverage. And leverage cuts both ways. But we're in the run, and we're in the FOMO. And the halving event is coming up in about 37 days. About to break down below 37 days. Got about 5,400 blocks left to go. The countdown is on. If you don't understand halving, watch some of my prior videos. I've talked about it ad nauseum, like a lot. We're in the FOMO period, and we're probably going to keep having FOMO for the next 37 days. Now, when we get to the halving event, roughly on the 19th of April, watch out. We may sell the news, and it may be a vicious retrace. I don't want to hear anybody that's watched me repeatedly come complaining that you got caught by a vicious pullback after the halving. If we keep going this FOMO thing, this pullback is going to be wicked and vicious. The real run probably won't start for 200 to 240 days after the halving. But we'll see. We'll see. HCM, that's China stuff. Sideways choppy China garbage stuff. DXCM. And MedTech. Ugh. I mean, the target worked 136, but that's a sideways choppy chart if I've ever seen one. SLN. Looks like that one wants to come back to the roadmap line. MINM. Yet another dumpster fire of a chart. Reverse split. Mega drop coming into this. Its volatility looks spiked up, retraced even deeper, spike up, retrace, spike, retrace, spike, retrace, spike. This thing's probably coming back down. Probably coming back down. Royal Caribbean, just churning here. Has the roadmap as support, and 139 is the target. On to decliners, SMCI. This is one I was talking about being ridiculous. Watch for the breakdown. And see how it moved. I moved target, moved alerts yet again without even trying. I don't even know how I can. It lets you move alerts way too easy on this thing. Let's start locking them down. That thing popped up on that last little flash down, popped up, hit the 1272, and it's kind of stopped here. Is that the final little squiggle? Maybe. Remember, we get this little, we get some little squiggles, and then, ouch. Maybe like, well, you know, that doesn't happen. Oh, I keep typing the wrong one. This one. Look right here. This is already forming. Looks just like that, right? Big spike up, a little bit of volatility, that chop right here, and then watch for the roll. That one's already down on the list. AVGO. That one could come back to the roadmap line. TLTR. Now this is actually interesting. I'm going to clear this chart. Look right here. We've got a support zone for a measured bounce right here. If this holds, target could be up here. In that zone. That'd be a pretty sweet play. Right there. Reminds me of this one. Looky. Right down in the target zone. Almost to the target. Almost that 178 alert. Almost. This one right here. If it holds that support and turns higher, we could be looking at a mega rally coming out of this one right here also. Mega rally. Could be talking about a move up into the 600 area right here on Boeing. It's set up. I'm telling you, may need a little push lower. And that could take a while. I mean, that could take 25, 26. Yeah, there you go. Actually, Control Z does not undo moving alerts. Watch this. Control Z doesn't undo moving alerts. Dun, 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 dun. Tesla keeps grinding. Looks like we may push down to the top of this box. 167 could be support. 158 could be support. It's been the support we've had for the last year. After we busted up through it, we came back, tested it. We may need another test. That's what it's looking like. GECH, GE Healthcare. Down here's the target. There's this. There was the resistance on the way up. Prior high. Broke through. Retesting the breakouts. If we can hold that and turn higher. Conservative entry above 92. Look for 96 and 99 on the upside. Coin tagged that 270 target that I talked about for, gosh, near like a year, maybe longer. Almost can't believe it. Probably need another retrace to be able to push higher again. FNGU, watch out. We're extended there. Roadmap line way on down there. That's a leverage, 3x leveraged ETN on FANG sector stuff. Dollar General moving down on sympathy for Dollar Tree. And looks like we're going to rally that right back. Watch out for earnings. Coming up tomorrow. Yeah, tomorrow. Dollar Tree. Was that earnings today? No. Yeah. No. Yeah, that was today. Missed on the top and the bottom. And reporting they're going to close a bunch of stores, 1,000 stores. Pretty rough. Pretty rough. AMD, if that was the actual top, which kind of looking like a topping tail at this point, could be heading back down to this zone. 95 to 100, maybe 85 to 100, somewhere in that zone. ARM, as I already mentioned, probably coming back down to this 70 to 80 zone. ODD, just chopping. If it breaks out, it could go higher, but it's just a choppy sideways, unpredictable piece of junk. I don't like unpredictable stuff, all right? Like, as I ask my VIP group all the time, do you want to be a market analyst and be able to tell where any chart's going? Or would you rather be a trader and just chase down the high probability patterns that are going to pay you out today? For me, I like to be a trader. I don't like to, for choppy sideways, corrective garbage, or things that are unreliable, like pharmaceutical med tech, I'd rather just avoid it. Just go somewhere else. There's plenty of other stuff out there. Plenty of other stuff. SRG, surge plays. Like, let me look at that. Ouch. Why would you want to get involved in something that's so volatile and doesn't go anywhere? I mean, sure, you can, if you picked one of these bottoms correctly, you could make a fair bit on the rip higher. But if you waited too long, you could ride it all the way back down. It's extremely hard to pick bottoms and tops and bottoms. Extremely hard. KSPI doesn't have enough. What the heck is a joint stock company? Are you kidding me? That sounds like some dangerous gobbledygook. The heck? Finance, rental, leasing. Yeah, maybe it's okay. I don't know. That doesn't look like something I want to get involved in. And there's not enough. There's no roadmap line. There's not enough candles. There's not enough data. Period. So S&P, watch out. We may find a top anytime. Now, 80% likely, 70% likely, whatever, that we're going to get this extension. But there's also, upwards of 30% likely that we fail and just crush and in a blaze of glory. One of these candles is going to be it. Now, if NVIDIA becomes the largest company, we're probably heading up here. Okay. NVIDIA right there keeps climbing the ladder. It's in spot number 4. That's with gold at top. If you just look at companies, it's in spot number 3. Microsoft hanging out right around 3 trillion. In order to NVIDIA get up to that high, NVIDIA's stock price got to go up to about $12.50. That would propel it up to the top spot. If it does that, I fear we're in for a major market correction. So just be careful out there. Be careful, be careful, be careful. All right. That's kind of list for the week, or list for the day. I'll be in Discord, and I'll see y'all later. Make sure that you give me a like if anything I said was beneficial. Make sure you hit the bell with the notifications so you know when I go live tomorrow. And I'll see you later.